You've built a successful business, and over the years, your corporate bank account has grown into a healthy, stable reserve of cash. At a certain point, you will likely want to take some of that hard-earned success and move it over to your personal or family accounts. But there is a major obstacle in the way. If you pay yourself through standard dividends, the government can take up to half of it in taxes before it ever reaches your pocket. Accountants call these locked-away corporate profits retained earnings. Relying on those standard dividend payouts is a highly inefficient way to access your long-term corporate wealth. It leaves too much of your money stranded inside the business. Today, we are going to look at a specialized wealth strategy that high-net-worth business owners use to legally bypass that tax barrier. Often, business owners hesitate to buy life insurance because they assume it means taking cash out of the business and locking it away in a policy where it can't be used for growth. This specific approach is called an immediate financing arrangement, or IFA. An IFA lets you use the same dollar to protect your estate and invest in your business at exactly the same time. The IFA transforms life insurance into an active, wealth-generating engine. Here is how it works. Step 1. Your corporation purchases a permanent life insurance policy designed to build up a large cash value. Step 2. Rather than waiting decades to access that value, the corporation immediately assigns the policy to a bank as collateral. Step 3. With secure collateral, the bank issues a loan back to your corporation for the exact amount of your premium. Step 4. Your business reinvests that borrowed money into daily operations or an income-producing portfolio. The insurance policy grows tax-sheltered in the background, while the borrowed money generates real-world returns for your company. Because you are using that borrowed money to earn business income, the interest you pay on the bank loan might also be tax-deductible. Your dollar is now doing double duty. It secures a permanent insurance payout for the future, and it actively funds your business today. While this sounds great, borrowing money to invest is a strategy that introduces real financial risk. Interest rate risk is real. The bottom line shows policy growth. The top shows your floating loan rate. If rates rise quickly while growth slows, the loan becomes dangerously expensive. If this gap widens, the bank may demand additional collateral or immediate repayment. Keep in mind, these arrangements last for 20, 30, or even 40 years, and lenders review them strictly every single year. Because of these factors, an IFA is only suitable for corporations with highly predictable, strong cash flows and the ability to comfortably absorb economic turbulence. Let's fast forward to the eventual passing of the business owner. When this happens, the insurance company pays out a large, tax-free death benefit to the corporation. The very first thing the corporation must do is use a portion of that payout to fully settle the outstanding bank loan. When this money enters the corporation, it triggers the creation of the Capital Dividend Account, or CDA. Think of it as government-issued tax-free tickets that allow a corporation to pay out money to shareholders without triggering personal taxes. This diagram shows how the government calculates your tax-free tickets based on the gross death benefit before the loan is paid off. They completely ignore the loan repayment. Let's put some numbers to that. If the payout is $4 million and your loan is $2 million, you send $2 million to the bank. You're left with $2 million in cash, but you still receive $4 million in tax-free tickets. That mathematical disconnect leaves you with $2 million unused tax-free tickets. This creates an entirely new, highly valuable asset, a surplus CDA. These unused tax-free tickets can now be applied to the old retained earnings that were stuck behind the tax wall from the beginning. By using the tickets from the surplus, that trapped cash can pass right through the barrier, unlocking decades of corporate wealth. It can now be distributed to your family completely tax-free. Setting this up requires precise coordination between legal, tax, and insurance professionals to ensure all the rules are followed correctly. Reach out to the experienced team at Infinity Wealth Management today to see if your corporation is ready to put an immediate financing arrangement to work.